Ever feel like you're missing a piece of the crypto puzzle? Well, today we're diving deep into a factor that could make or break the next crypto bull market, wrapped Bitcoin. It's like this crypto bridge that lets Bitcoin enter the world of DeFi on other blockchains. And let me tell you, this bridge is about to get a lot more traffic. And why should you care? Because this could fuel huge gains in certain altcoins and potentially Bitcoin itself. Oh, and it could also trigger the next crypto crash. So today we're going to equip you to spot the opportunities and avoid the pitfalls of the coming wrapped Bitcoin boom.
How there's a plan. Wrapped Bitcoin is fascinating because it acts as this bridge between Bitcoin and DeFi. Like you take your Bitcoin, lock it up, and get a tokenized version that can be used on other blockchains like Ethereum.
Okay, so that makes sense at a high level, but how about we get a bit more into the nitty-gritty here? What are the actual mechanics of wrapping Bitcoin? How do these protocols ensure that the wrapped tokens stay pegged to the price of Bitcoin?
Well, different protocols have different mechanisms, but generally they revolve around a system of custodians and smart contracts. So with wBTC, for example, you have a consortium of institutions that hold the Bitcoin backing the wBTC tokens. They basically mint and burn wBTC based on demand. Ensures the peg to Bitcoin.
Interesting. So there's an actual real-world entity holding the actual Bitcoin. Seems like that introduces a level of trust that some crypto purists might not be too happy about.
Yeah, you're right. It's a trade-off between trust and accessibility. So wBTC with its institutional custodians is considered more centralized. RenBTC, on the other hand, that's more decentralized. It uses a network of nodes to secure the Bitcoin backing the RenBTC tokens.
So there's a whole spectrum of trust models, each with their own pluses and minuses. What about the gas fees involved in wrapping and unwrapping Bitcoin? Those can be a real barrier to entry, especially for smaller investors.
Oh, absolutely. Gas fees are a big factor, particularly on Ethereum. That's one reason why we're seeing wrapped Bitcoin protocols popping up on other blockchains like Solana and Cosmos. Transaction fees are way lower there.
Makes sense. So it seems like there's a lot of innovation happening in this space. But before we go all in on the specific opportunities and potential winners, let's take a step back and look at the bigger picture. Wrapped Bitcoin isn't new, is it?
No, it's been around for a few years. It had its first big surge in popularity during the DeFi boom of 2020. People were like dying to use their Bitcoin as collateral to borrow against in DeFi. And wBTC was the main way to do that.
And that led to a big chunk of Bitcoin getting wrapped on Ethereum, right?
Yeah, exactly. At one point, over 1% of all Bitcoin was wrapped on Ethereum. Crazy amount of value locked up in DeFi.
That is wild. But then things cooled off a bit, didn't they? What happened?
Well, a couple of things, I guess. First, the limitations of wBTC, the centralization, the gas fees, led to those competing protocols like RenBTC popping up. Then you had the rise of centralized crypto borrowing platforms like Celsius. They offered a simpler way to borrow against Bitcoin without having to go through the complexities of wrapping.
So they were like the easy button for Bitcoin lending. But we all know how that ended, right? Celsius got a little too greedy with leverage, and the whole thing blew up spectacularly.
Yeah, a harsh lesson learned for sure. But it really highlights the risks of leverage, something we need to keep in mind as we're looking at all this potential with this new wrapped Bitcoin boom.
Okay, so history is repeating itself, but this time it's on a potentially much larger scale. So what's driving this new wave of interest in wrapped Bitcoin? Why are people so excited about it now?
Well, there's a few factors at play here. First, Bitcoin is in a much stronger position than it was a few years ago. You have the launch of spot Bitcoin ETFs and similar financial instruments. Those have given Bitcoin's price a boost and are probably going to reduce its volatility even more. Makes Bitcoin even more attractive as collateral.
So Bitcoin is becoming the ultimate safe haven asset in the crypto world. And now with wrapped Bitcoin, it can also be a yield-generating powerhouse in DeFi. That's a pretty powerful combination.
It is. And that's not all. You're also seeing major exchanges like Coinbase getting into the wrapped Bitcoin game with their own protocols like cBTC. This makes wrapping and unwrapping Bitcoin super easy and accessible for way more people.
So basically, it's becoming increasingly seamless to integrate Bitcoin into DeFi. But hold on. If Bitcoin is this safe haven asset and now it's easier than ever to use it as collateral in DeFi, doesn't that kind of create a recipe for disaster?
Yeah, it's a valid concern. The easier it is to use Bitcoin as collateral, the more leverage people are going to want to take on. And as we know, leverage is a double-edged sword. It can amplify gains, but it can also magnify losses.
Okay, so we've got this potential powder keg of leverage building up in the DeFi ecosystem. But before we dive into the potential risks and how a crash might unfold, let's explore the potential upside. Which altcoins are going to benefit the most from this wrapped Bitcoin boom and why?
Well, the obvious winner here is Ethereum. A lot of wrapped Bitcoin is already on Ethereum. And with DeFi continuing to grow on that platform, it's just the natural place for wrapped Bitcoin to go.
Okay, so more Bitcoin flowing into Ethereum's DeFi ecosystem should, in theory, lead to more demand for ETH, potentially driving its price up. But can we quantify that? Are we talking 10% increase, 50% increase, something even bigger?
It's tough to say for sure. But some analysts are predicting that the increased demand from wrapped Bitcoin could push ETH's price up by 2x or even more. Of course, it depends on a bunch of factors, but the potential is definitely there.
Wow, a potential doubling of ETH's price. Definitely something to pay attention to. But let's not forget about the other players here. Coinbase's cBTC, for example, that supports Base and Solana. What's your outlook on those chains?
Both Base and Solana are interesting. Base, being Coinbase's own layer 2 solution, has a lot of potential, especially if Coinbase decides to offer BTC yield savings products linked to cBTC. Solana's been gaining some traction in DeFi, but its history of network outages is a concern. It's got to demonstrate greater stability and reliability if it wants to be a big player in the wrapped Bitcoin boom.
Yeah, reliability is key, especially when you're dealing with so much money. But here's something I find curious. You mentioned earlier that most cBTC is actually being minted on Ethereum, not Base. Why is that? You think Coinbase would be pushing their own layer 2 solution?
Yeah, you would think so, wouldn't you? It's a bit of a head scratcher. Maybe they're just following the market, recognizing that Ethereum's DeFi ecosystem is still the big dog. Or maybe they've got a more strategic plan. Maybe they're waiting for Base to mature a bit more before really pushing cBTC adoption there.
Interesting. So it seems like Ethereum is still king of the hill when it comes to wrapped Bitcoin. at least for now. But we can't forget about tBTC. That protocol is integrated with Wormhole Bridge, gives it access to tons of different blockchains.
Right. tBTC is the wild card. It can bring wrapped Bitcoin to those emerging ecosystems like Cosmos, Aptos, and Sui. Those ecosystems are still pretty young, but they're growing fast, and they're attracting some of the best developers out there.
So we've got wBTC, cBTC, and tBTC, all vying for a piece of the wrapped Bitcoin pie. But how big could this pie actually get? We already saw over 1% of Bitcoin wrapped on Ethereum in the last cycle. What are we looking at this time around?
That's where things get really interesting. Remember that 1% figure was with limited accessibility and utility in DeFi. This time, we've got way more wrapped Bitcoin protocols with much better accessibility and a wider range of use cases.
Plus, Bitcoin itself is arguably a much stronger asset than it was back then, making it even more appealing as collateral.
Exactly. Some analysts think we could see close to 1 million BTC being wrapped, which is about 5% of the total supply.
Whoa, 5%. That's insane. To put that into perspective, that's about the same amount of Bitcoin currently held in spot Bitcoin ETFs. But the big difference is that most of the Bitcoin in ETFs can move around freely, whereas the Bitcoin wrapped on chain is going to be locked up in DeFi.
Exactly. Imagine what that could do to Bitcoin's price. A big chunk of the circulating supply effectively taken out of circulation, locked up in DeFi protocols, earning yield and fueling the growth of the altcoin market. This could be a game changer for the entire crypto space.
Okay, now I'm seeing the bigger picture. We've got this potential convergence of factors, a stronger Bitcoin, easier access to wrapped Bitcoin, a growing DeFi ecosystem. That could create this massive wave of liquidity and innovation. But hold your horses. We also need to look at the potential downsides, the risks involved, and how a crash might unfold.
You're absolutely right. The potential for profit is huge, but so is the potential for loss. And that's what we're going to explore in the next part of our deep dive into the world of wrapped Bitcoin.
Stay with us. All right, so before we went to what felt like our version of Money Printer Go BRR, with all that Bitcoin getting wrapped, you mentioned the potential risks involved with all this. I think our listeners definitely savvy enough to know this isn't all sunshine and roses, right?
Definitely not. The more Bitcoin gets wrapped and used as collateral, the higher the leverage in the DeFi system becomes. And with higher leverage comes greater risk.
Okay, let's unpack this a bit. For someone who's maybe not as familiar with the intricacies of DeFi, can you break down how this leverage actually works and why it's so potentially dangerous?
Sure. Imagine you have one Bitcoin worth, let's say, $50,000. You wrap that Bitcoin and use it as collateral to borrow $25,000 worth of stablecoins. Now you have $75,000 to play with in DeFi. You can use that money to buy more altcoins, stake it in yield-generating protocols, or even use it to borrow even more stablecoins. That's leverage in action.
So you're essentially multiplying your potential gains, but also your potential losses.
Exactly. If the value of your collateral, the wrapped Bitcoin, drops below a certain point, your position will be automatically liquidated to cover the loan. This means your wrapped Bitcoin will be sold off, often at a loss, to repay the debt.
Ouch. So what could trigger that? What could cause the value of wrapped Bitcoin to plummet so suddenly?
Well, a few things. A sharp drop in Bitcoin's price is the obvious one. Wrapped Bitcoin is pegged to the price of Bitcoin. So if Bitcoin crashes, wrapped, Bitcoin crashes too.
Okay, that makes sense. But couldn't a similar thing happen even if Bitcoin's price stays stable?
Absolutely. Imagine there's like a sudden panic in the altcoin market. Maybe a big DeFi protocol gets hacked, or some prominent crypto person makes a negative comment that triggers a sell-off.
So the altcoin market tanks, dragging down the value of all those DeFi assets that people have leveraged their wrapped Bitcoin to buy.
Exactly. And as the value of their collateral drops, they get hit with a wave of liquidations. This forces them to sell their wrapped Bitcoin to cover their loans, which further depresses the price of wrapped Bitcoin, triggering even more liquidations. It creates a cascading effect that can get out of control.
Yikes. Sounds like a domino effect that could wipe out a lot of wealth really quickly. But isn't there a safety net here? I mean, these wrapped Bitcoin tokens are backed by actual Bitcoin, right? Can't people just redeem their tokens for the real deal if things start to go south?
Well, in theory, yes. But remember, there's a layer of complexity here, because wrapped Bitcoin isn't native to the blockchains it's being used on. It's represented by a token that's backed by Bitcoin held somewhere else, either by a custodian, a network of nodes, or some other mechanism.
Right, those special trailers we talked about earlier, only as good as the car they're attached to.
Exactly. So if there's a sudden rush to redeem wrapped Bitcoin for actual Bitcoin, and the exchanges or custodians responsible for managing those redemptions don't have enough Bitcoin to meet the demand, we could have problems.
Like what? Paint a picture for our listener. What could this run-on-the-bank scenario look like with wrapped Bitcoin?
Okay, so imagine a wave of panic selling hits the crypto market. Bitcoin is plummeting, altcoins are crashing even harder, and everyone is trying to redeem their wrapped Bitcoin for actual Bitcoin at the same time.
So basically a classic bank run, but with Bitcoin instead of fiat currency.
Exactly. Exchanges and custodians start getting swamped by redemption requests. They might have enough Bitcoin in reserve to handle normal activity, but they're not prepared for a mass exodus like this.
So what happens? Do they just say, sorry, we're out of Bitcoin?
Well, they might have to. They could start to delay redemptions, impose limits on withdrawals, or even halt trading completely.
And that would just make things worse, wouldn't it? It would further erode confidence and fuel the panic.
Absolutely. People would start to worry that their wrapped Bitcoin is worthless, that they're going to lose everything. They start selling at any price, driving the price of wrapped Bitcoin down even more.
It's like a self-fulfilling prophecy.
Yeah, unfortunately. And the more Bitcoin gets wrapped, the bigger the problem becomes. We could be talking about billions of dollars worth of wrapped Bitcoin suddenly becoming illiquid, untradeable, essentially frozen.
Wow, that's scary. This isn't just a theoretical risk either, is it? We've seen stuff like this happen in crypto before, haven't we?
Oh yeah, definitely. Remember the collapse of Terra Luna and its stablecoin UST? That was like a textbook example of what can happen when a supposedly stable asset loses its peg and triggers a wave of liquidations and panic selling.
Right. A stark reminder that even in the world of crypto, which is supposed to be decentralized, there are still points of centralization and vulnerability.
Exactly. And with wrapped Bitcoin, we're essentially adding another layer of complexity and potential fragility into the system. We're relying on these protocols, these custodians, these exchanges, to manage the balance between the real world of Bitcoin and the virtual world of DeFi.
Okay, so we've painted a pretty bleak picture of what a wrapped Bitcoin-fueled crash could look like. But to be fair, we've also talked about the incredible potential upside. The possibility of massive gains unlocking a whole new level of utility and value for Bitcoin. It's a high-risk, high-reward situation, right?
Exactly. There's a lot of potential, but it's so important to be careful. Don't let FOMO cloud your judgment. Do your research, understand the risks, and make informed decisions based on your own risk tolerance and investment goals.
So for our listener who's now absorbing all this information, what are some practical steps they can take to navigate this landscape? What are some key takeaways they should keep in mind as this wrapped Bitcoin narrative unfolds?
First and foremost, don't get caught up in the hype. Take your time, do your research, and understand the risks. Remember, investing in crypto is a marathon, not a sprint.
Okay, that's good advice for any investment, really.
But when it comes to wrapped Bitcoin specifically, what are some red flags investors should be on the lookout for? What are some signs that things might be getting a little too frothy?
Well, one red flag is excessive leverage. If you see people borrowing tons of stablecoins against their wrapped Bitcoin, that's a sign that things might be getting a little out of hand.
So basically, if it feels like everyone's getting rich quick by leveraging their Bitcoin to the max, that's probably a good time to start taking some profits.
Exactly. Another red flag is a lack of transparency. If you can't easily find information about how a particular wrapped Bitcoin protocol works, who the custodians are, or how redemptions are managed, that's a sign that you should be careful. Transparency is key, especially with something as complex as wrapped Bitcoin. What else should investors be paying attention to?
Well, look for projects with strong fundamentals, a clear vision, and a proven track record. Pay attention to their team, their technology, and their community. Don't just chase hype. Look for substance.
Great points. And as always, diversify your portfolio. Don't put all your eggs in one basket, especially in a market like crypto.
Absolutely. Diversification is key to managing risk and to maximizing your chances of success in the long run.
Okay, so our listener has knowledge, a healthy dose of caution, and a diversified portfolio. What else should they keep in mind as this wrapped Bitcoin thing keeps developing?
Stay informed. The crypto landscape is constantly changing, so it's crucial to stay up to date on what's happening. Follow good news sources, engage with the crypto community, and never stop learning.
And be prepared for volatility. Crypto is known for its wild price swings, and this wrapped Bitcoin boom could make things even more volatile.
Yeah, buckle up. It's going to be a wild ride.
I think that's a great place to pause for now. We've covered a lot, and I'm sure our listener has a lot to think about.
Yeah, there's always more to explore, especially with something like wrapped Bitcoin.
When we come back, we'll wrap up this episode by looking at a few more critical aspects of this wrapped Bitcoin phenomenon, the potential long-term consequences for Bitcoin, the ethical considerations of wrapping such a valuable asset, and what this all means for the future of DeFi. Stay tuned.
Welcome back to the deep dive. We've really gotten into the potential of wrapped Bitcoin, but also those crazy risks that come with it. And before we send our listener off to cook up their own wrapped Bitcoin strategy, I think it's time to zoom out a little and consider the bigger picture.
I agree. Wrapped Bitcoin isn't just about making a quick buck in altcoins. It could actually change how we think about and use Bitcoin in general.
Okay, I like that. Give me the big picture take.
Well, for years, Bitcoin has been seen as mostly a store of value. Digital gold, right?
Right.
But with wrapped Bitcoin, it's actively involved in DeFi, unlocking a whole new level of utility. So instead of just sitting in my cold wallet, my Bitcoin can be out there earning yield, being used for loans, all sorts of DeFi magic. That does change things.
It really does. It makes you wonder about the future of Bitcoin. Could wrapped Bitcoin actually become the main form of Bitcoin used in the entire financial system?
Wow. Are we talking about a world where people are paying their bills with wBTC or cBTC instead of actual Bitcoin?
It might not be as crazy as it sounds. Imagine most financial transactions are happening on blockchains. And those blockchains are all connected through things like Wormhole Bridge. In that world, a wrapped version of Bitcoin, one that can easily move between different ecosystems, that could become the go-to form of Bitcoin.
I see. It's not about replacing Bitcoin. It's about making it better, more adaptable for a world with multiple blockchains.
Exactly. But this transition, if it happens, it's not going to be easy. There are ethical things to consider, regulatory hurdles, and of course, those security risks that always come up.
Okay, let's get into those challenges. What are some of the ethical concerns people have about wrapped Bitcoin?
Well, one concern is centralization. Right now, most wrapped Bitcoin protocols use some kind of custodian or trusted entity to hold the Bitcoin backing the tokens. So that introduces counterparty risk. A lot of crypto people aren't comfortable with that.
Yeah, it goes against the whole idea of decentralization, which is what Bitcoin was all about.
Exactly. And then there's regulation. As wrapped Bitcoin becomes more integrated into finance, regulators are going to want to get involved. We could see new rules and regulations, which could slow down innovation or make it harder for everyday people to use wrapped Bitcoin.
It's always a tough balance between innovation and regulation. Too much regulation can stifle progress, but too little can create problems.
For sure. And then there are the security risks. We've talked about the possibility of a wrapped Bitcoin crash, but there are also smaller risks, like what if a custodian gets hacked, or there's a vulnerability in a smart contract.
Yeah, those are real concerns. Even with the best protocols, there's always the chance of human error or someone finding a way to exploit the system.
And the more valuable wrapped Bitcoin becomes, the more attractive it is to hackers.
So it seems like Bitcoin is entering a new phase, where it has more potential than ever, but also where the risks are bigger and the stakes are higher.
I think so. It's exciting to be involved in crypto, but it's also important to be careful.
Well said. So as we wrap up this deep dive into wrapped Bitcoin, what's the one thing you want our listener to remember? What's the most important thing for them as they navigate all of this?
I think the most important thing is to be balanced. Don't get caught up in the hype or the potential to make money. Understand the risks, do your own research, make your decisions based on your own situation and goals.
Great advice. Knowledge is power, especially in crypto. Stay informed, stay vigilant, and stay curious. And on that note, I think it's time to wrap up this episode of The Deep Dive. We hope you found our exploration of wrapped Bitcoin helpful, maybe even a little mind-blowing. Until next time, happy investing.